Welcome, everyone. Thanks for joining. And we're here to talk today about wealth creation unleashed. And before we start, allow me to disclaim that this is just general information. Okay, we're not going to take into account any personal situation, and this is not financial advice for any one of you. Okay. So before we start, should we introduce each other? Melissa, do you want to start?
Should I introduce myself?
Go ahead, please.
Hi, everyone. I'm Melissa Gielnik. I've been a mortgage broker for 22 years. I work all around Australia, and we specialize in residential investment, residential and commercial loans. And yeah, me and my team love what we do every single day. It's great.
Awesome. Myself, I'm Pablo. I'm originally from Spain. I've been living in Australia for the last 10 years. And before PropHero, I bootstrap my own company, also took it to over like 15 countries, 400 employees. So I've been always like the startup world, an entrepreneur. And when I decided to step away from my previous business, I was looking forward to maybe like 6 months, 1 year, like just taking a bit of time off. And my longtime friend, Michael, approached me with this amazing idea to revolutionize property wealth creation using data, using like a technology to just take care of everything. And I decided to stop my break, put it on a pause, and then jumped into the business. Like it ticked all the boxes. Property investment, which I have been doing also for the last 15 years. I have built a portfolio myself, and it was just a way to do it even better and help others do it as well. So welcome again. We'll be hosting the session today. We'll be talking about 6 topics today. Why property is your wealth building partner. What are the benefits of property investment? We'll talk a little bit about the PropHero's tech-powered approach, including our app and the data models we use. We'll talk about the power of equity, a bit of the market update, and then discuss a bit commercial versus residential property investments. Let's get started with why property is your wealth building partner.
Yeah. So look, property and wealth building, you can wealth build through property. It's such a powerful tool. So I really think that there's 5 key strategies when building wealth and buying property. So buy and hold strategy. So this is something that when you buy an investment property, the longer you can hold it, the more you'll actually make from it. So, no one's ever said my property decreased over time. Like property always increases over time. Location selection, and this is where like PropHero really excel. So choosing the right location, looking at and we'll talk about this a little bit later, all the key indicators, the growth areas, making sure you buy property in the right area. So over my past 22 years, I see a lot of people who buy property and the property doesn't really appreciate as much as other areas. So that's a really key strategy when you're looking at buying property. Value add investment. So again, buying a property, maybe an established property, and being able to add to it. There's so many different ways you can add to it. It might be that you decide to do a kitchen renovation, an overall renovation. You may buy something that has the potential for development later on. There's so many ways you can add value to your investments over time. So, and again, a lot of these strategies are about buying and holding. Diversification. So diversification, now this is very much for the more mature investor. When you look at residential versus commercial, you also look at, residential investments, commercial investments, and shares. There's lots of ways you can diversify your wealth. And it's great to diversify. And then financing and leveraging. So leveraging off your home to finance your property is a great way to start your property portfolio. Quite often I speak to people and they say to me, Melissa, I want to invest in property, but I don't have a deposit, and they own their home. So, there's so many great ways to leverage off what you already have and finance basically the next chapter, which is getting into investment and creating wealth.
And one of the main points here, like about thinking long term, like I always like during my days now, I constantly talk about investing, creating wealth, especially through property. And that long-term thinking is what property is all about.
It is all
So
about that.
the compounding and the magic of compounding happens when you stick to your investment for a long term.
Yep.
For a long while. And property's nature is about long term. Whereas when you have your shares, you tend to just sell them when there's a bear market or whatever. Whereas property, you just hold to it.
Yeah.
So you think about it, and that's the beauty about property. Like in the long run, it will grow.
Always. No one's
especially if
ever
you find
said
the right location.
correct.
So,
and the buy and hold strategies, like, it's really important. It is actually a strategy.
yeah.
So, and yeah, shares are quite volatile.
Yeah.
You've got to know when to buy, you've got to know when to sell, and they're of the moment, whereas property, you can hold it for the next 20 years and say, I'm going to retire in 20 years, and hold it for that amount of time.
I agree.
And you get the benefit of that. And we'll talk about all the benefits of that soon.
And the location, everything. Yeah.
Yeah.
Just a brief introduction.
Yep.
Let's move to the next slide.
So why is property your wealth building partner? Well, when we look at investing in property and we look at investing in shares, we just touched on the volatility of shares. So shares are something that requires a different level of education often, and it's often hard to find someone who, if you're I'm going to say a small time investor and you've got a couple of $100,000 who wants to invest that money in shares for you.
Mm-hmm.
So you just Oh, beautiful.
Yeah.
Yep. So property is a tangible asset. You can see bricks and mortar. You can touch it. It's right there. It's income generating. So we're generating income week by week, month by month. It's nice. It's slow. It's going to help you pay for your financing that you need. Financing is much easier to obtain on investing in property. It's a little bit harder on the share side, and I'll touch on that in a minute. And you can leverage off your current property to buy an investment property. So long-term properties always grow. So when we look at shares, and it's always good to compare something to property, it's a much more liquid asset. So yes, you can buy and sell it quickly. But again, it's not really a long-term strategy. No one's ever bought a share and kept it for 20 years and gone, oh, look, it grew, unless you bought Bunnings shares when Bunnings first opened.
Mm-hmm.
So diversification, yes, it's more diverse. You can buy more, but again, you need someone with the expertise to do that. And when you've only got a small amount of money, we're not talking millions here. It's actually quite hard to find someone with the expertise to, diversify in shares. You get dividend income, but it's a once-off income once a year, as opposed to the slow and steady income that you get from an investment property. There is potential growth, but you need to know what you're doing. You need to know when to buy and when to sell. So they're just more volatile and very much more of the moment. Property is a long-term strategy, and it's a way of growing your wealth and diversifying your income over time.
And I also think there's an emotional component into owning something. Like,
that you can see.
Like when you're like with your group of friends, like you talk about, okay, I own one property, I own 2 property investments. You don't usually talk about, I own 200 shares of whatever company it is. Like, and I think that's it also makes it very, very powerful. Like, you want to build wealth, and property wealth is a thing. So I think that emotional component also helps a lot to stick to it.
Yeah, it does. And then you start talking about, well, I own a property in Sydney, and people go, oh, I love Sydney. And there's that connection there.
And for example, the type of investments we've done like now in Indonesia and Bali, like, you get to go visit your property and you can book it, you can stay there, like
you can tax deduct it.
Yeah, you can tax deduct it. It is very powerful.
Yeah.
So
I'm excited about the Spain property. So you can go to Spain and tax deduct that.
We'll talk about it later. Like, my wife keeps telling me, "Hello, should we diversify more in shares property? We're diversifying in countries already." Like,
yeah,
not a bad thing.
Well, it's a really good thing, especially like, we look at the economy in Australia globally, because we very much follow the trends of other countries. So it's good to know what's going on in other countries.
And each time more, I hear from clients who come to us, like, I don't want to have all my eggs in the same basket.
No. And that's really important.
So yeah, interstate is a thing, but also.
And so if you're living in Victoria and you want to buy in WA, how do you know where to purchase?
100%.
Yeah.
Cool. Let's move on.
Let's move on. The top 3 benefits of property investing. So the potential for appreciation. So we've spoken about, no one has ever said my property went down in value. So if you've got a property in Australia, especially over COVID, that would have definitely have increased. Now it's looking at the right areas to invest so you can grow your wealth.
think it's important the right area.
The right area is really important.
Especially like now with the climate change, flooding areas. Like I'm sure some of those areas maybe the properties have decreased, but making sure you find the right areas is key now.
And there are some really key things to note. Like no one at the moment would buy an investment property in Sydney or Melbourne. There's just no room for growth. The taxes are really high. Like there's just a lot going on in those states. And the states that are great for property investment, if you don't live in them, how do you know where to buy? So
100%.
Steady income stream. So that's the rental income coming in week on week. And it builds your wealth as you pay off your property. When you retire, that income then becomes income for you to live off.
It pays your bills, it pays your education of the kid. Like
it pays for your life when you're retired.
100%.
Yeah. And portfolio diversification. So when we look at diversification, we can look at commercial versus residential, which we'll touch on a little bit later. But you can diversify your property portfolio by buying in different states, different types of properties. There's lots of ways you can diversify.
Yeah.
So negative gearing. People always talk to me about negative gearing. And I say to them, what does that mean? And very few people can explain to me what negative gearing is. So I'm going to talk you through it really simply. So it's the expenses associated with the investment property versus the income that you receive. So when we talk about expenses, we talk about mortgage interest, not principal, but interest, maintenance costs, property management fees, and other related costs such as rates and water. If we can go to the next slide. So really quite simply, this is a case study that I put together just to show you what it looks like. So if you were to purchase a property for $475,000 and the costs, stamp duty, legal fees, $25,000, you owe $500,000 on that property. Now let's assume for the sake of this that we've borrowed the whole $500,000 against your current home. What actually happens is you will incur interest on the $500,000 at a rate of 6.1 of $30,500 per annum. Then you have the additional costs, the rates, the water, the house insurance of, let's say, $2,500. So your total costs are $33,000 per annum. You receive rent of $480 per week, which is $24,960 per year. So the way that we work out negative gearing is we take the costs, we take away what you get in income, and then you have the negatively geared portion, the portion that comes out of your pocket. And look, it looks $8,040. You might go, oh, wow, that's quite a lot. But when you do your tax in Australia, you actually get a tax benefit for that because it's a negatively geared portion. So on a $120,000 income, you'd actually return 95% of that amount of money. So you'd get like $7,800 back. So then you can put that in a bank account and use that for the next year, or you can look at it as forced savings. But negative gearing is all about expenses versus income. And then, you get to tax deduct it. It's a great benefit. It's actually forced savings. The government are actually paying you back some of your tax that you've paid because you have a property and you're growing your wealth.
And it's paying the property as well. So
it's paying the property. Otherwise, you can just pay tax and not get any money back and not have a property. It doesn't make sense.
No. Okay. So a bit about PropHero. PropHero is building the next generation buyer's agency. Okay, so the mission from PropHero is to help our clients become more financially free, which means generating that passive income that comes from property investment. So by selecting the right location, we've proven to outperform the market, which again is what we were discussing before. It's about selecting the right area. So, and the two main things that PropHero does very well is obviously finding the right locations through our data models. And it's very we will talk more about the data models later. And then allowing you to diversify globally and taking care of it.
Yeah.
So again, this is just a brief summary about what's PropHero, but we'll deep dive a little bit more. So what we've achieved so far. Last year, our areas grew by 13% versus the market at 8%.
And I actually read some of the reviews on your website, and they're actually outstanding how much growth there was on properties worth $450,000.
And how many clients are coming back to us
to get another property?
Just using the equity to buy their next property.
Yeah, leveraging.
So out of pocket money, very little.
Yeah.
So, and they did on average 65K. And when you think that already with 70, 80K, you can put like the full expenses of your next property because the rest you will be leveraging.
Yep.
Again, saving 10, 15K in a year can sound reasonable for a family income and go for the next property.
And $65,000 a year is an average income.
Yeah.
Like, you know, there aren't too many people out there who I said, if I could give you an extra $65,000 a year, would you like that?
Yeah. And 20% of our clients come back and repeat back. So
Nice.
But this comes with a lot of work behind. Like it's like we're analyzing over 10,000 properties each year.
Yep.
And there's a massive funnel to get to the right properties. We bought over 400 properties like through our history, and we are nearly, it says 80 plus, like we're nearly hitting like 100 people in the company. So company has been around for 2.5 years only. We've been investors for over 10 years, 15 years in different countries. But man, the growth has been phenomenal. And I come again from building my own previous startup, which was bootstrap, grew a lot. But this is just phenomenal. It's because it's covering a need in the market.
Yeah.
People need to start generating, like our clients, other source of income, and they have no idea. They know they want to get into property, but they have no idea on how to get it.
And it's quite funny because I was talking today to all your staff and I was looking at your funnels and they're very, very impressive. But we were talking today about how when you go and buy a property, the agent represents the vendor.
Mm-hmm.
And what PropHero is doing is representing the buyer. Yeah. So, and I think that's a really great message to put out there because both sides should be represented.
And especially when you think how the like we find price properties at a better price because we have the relationship with the seller agents as well. So I think it's a very good value proposition. So let's deep dive a bit more into our data models, and this is how Michael, my co-founder, convinced me into the business. So
and he loves the data models.
No, I mean, I obviously know about the data because I've been here listening to him like for a while, and I'm an engineer as well as a background. But he strives for data. So when he came to me with these data models, and these data models are constantly improving because we are constantly getting even more data from our clients that it's not even like, it doesn't even exist out there. So, and we are improving our data models. But when he came to me with the initial data models already, it was like, okay, well, this is not for you to continue investing, but there's a business out of it. There's a need for clients to use this knowledge, like to find the right areas and take care of everything so that the clients can step into the property ladder. And again, when you get into our app and you see the market dynamics, the macroeconomics, the supply and demand, the climate factors, all these, this is just what we show you, but we are analyzing over 200 million data points out of 26 data sources.
It's actually insane.
It's insane.
And it's technology and team.
Yeah.
So, you know, you've got the team behind the technology to support all of this.
And the team also our partners in the ground.
Yeah.
So talking about the funnel, the property funnel, the data models will filter out of the 15,000 plus suburbs in Australia, the top 1%. But out of those areas, we will work with the local partners who end up finding the best properties in the area. Yeah. And then they go through our
And this is why last year you had so much growth for your clients because that's the model that you use.
So data is at the forefront of our company. And again, we can be talking like Michael will be talking much more about data, but just with an introduction.
I heard him last webinar. He loves the data.
Yeah. But data is not only the thing, it's also about diversification. So think about you now have index funds or ETFs where by just depositing your money in Australia, it's being diversified globally.
Yes.
You're getting shares from anywhere in the world. Here with property, our vision is to be able to do that as well. Like you don't want to have all your eggs, although Australia has been growing forever, is a great country to invest. Why should you have all your properties in Australia? Yeah. So being able to offer our clients different places to invest that are like, and again, we're now operating in Bali, Indonesia, but mainly in Bali, in Australia, in Ireland and Spain. Yeah. But that's just the beginning. The idea would be to have like 10, 20 plus countries where you can just invest and create a global portfolio. So this allows you to, okay, now there's a bear market or whatever in some area, like all your portfolio is not going to fall.
No, that's right. And what I really love about it too is in Australia, if you have, I'll use a super fund as an example. If you have a super fund and you've got $250,000 in your super fund, you can't buy a property. You have to get a loan to buy a property. But if we take that money out, we can actually buy a property in Spain for $150,000.
100%. And we'll get
And it has great rate
between 8 to
return.
10% return yields plus depreciation. So yeah,
And
great investment.
That's quite mind-blowing to me, to have $150,000 and to go to another country and be able to buy a property with 8 to 10% return.
And this has traditionally been just reserved for high net worth individuals, family offices, but unlocking that potential for a bigger mass market.
Yeah. We talked
what
about
we're
this
doing.
before, like buyers advocates used to be seen as people that the rich would use only, and now it's available to everyone with great technology behind it. So it really is about, having the right team behind you to get where you need to go.
And for a fact now, a lot of those high net worth or family offices are approaching us because they see that even our data technology gives better returns than their own teams.
Yeah.
So yeah, this is a very good value proposition from PropHero. And then our process, like taking care of everything. So think about most of our clients, busy professional, young families, like we're all busy with our time, like with our schedules. And it's one of the biggest financial decisions you make, like either buying your owner occupier property or your investment. So are you gonna make that decision just by using 1 hour of your day per day if you have it?
Like, so historically people did that. Yeah. Historically they did.
They did inspections on Saturday mornings.
Yeah. And they didn't always make the right decision, which is why some people are wealthier than others. So this,
by taking care of everything and showing you through the app the right properties, like showing you what you need to get confidence and okay, this is the right property for you.
Yeah.
Then all the strategy around like building property wealth is not just about buying one property. It's like you want to create wealth, like generational wealth. So what are your needs? Why are you investing? What's the passive income you may need? Or what do you need for the future? So all that strategy.
Yep.
We have strategy sessions and it will take from 1 to 2 months. Like people can take a bit longer to be ready. There's some clients who just come, hey, I know already, like I need to go. They are ready, but some others need the time.
Yeah.
And we're there with strategizing and searching, showing you some properties that you may miss or not, but that's the process to convince you and to make you ready.
Yeah.
Then obviously the settlement, like we take care of everything, the paperwork, like it's all digitized through our checklist in the app, and then reviewing that portfolio. So it's about not only buying one property, but growing and optimizing.
And it's a one-stop shop. Everything gets taken care for you. So
and portfolio growth
easier
with partners like Melissa, like obviously it's like about refinancing. Why should you be paying more interest, or how could you pull out equity to buy the next one?
Yeah.
And that's why that marketplace model, we partner with the best in each category. And then that's also a work that we've done, because how many mortgage brokers are in Australia?
Oh, like 14,000.
And why would you end up choosing one or the other? We've done a lot of that work. Like we've spoken and we know most of them, but we end up partnering with those who we really believe are going to add the most value to our clients.
Absolutely. And we're all about being well aligned with what the client needs and what they're looking at doing.
And with the values of the company. Because again, we want to make sure we work with good people, like transparent, honest, like, and that's again, we've spent the whole day here together and we just connected like
well, before the webinar started, you told me your vision. Tell everyone your vision.
Like it's just to help our clients become more financially free. Like it is very powerful. Like we are allowing them to have time to spend more time with their kids, with their families. Like, so
and it's funny how in the past people have made these decisions alone and then maybe got them wrong, maybe got them right, but at least this shows them the way that they need to go. And and it's testament when you have people coming back again, because that shows them that it's worked. And you go, like, and referrals, but not only that, you've got people who are buying 1 or 2 or 3. That's what you want. We want everyone to buy 1, 2 or 3.
100%. Let's talk a bit more about equity. Okay, how do we unlock that equity?
How do we unlock the equity?
Your portfolio.
Well, unless you totally bought in the wrong area, your house over COVID will have grown in value. So let's just say, I've again put down a really simple, like a simple example. Let's just say that your house is worth 600,000 and you owe 150,000. Your equity is 450,000. Now, we're going to go and purchase our first investment property. We use all the technology that PropHero has. We're going to purchase for $475. So this is another misconception about investing. People think when you go to invest, you need to have $700,000 and $800,000. It's actually incorrect. There's all different levels of investing. So in this example, we're going to buy for $475. Our costs are $25,000. So we are going to borrow $500,000. Now, that's amazing because now we have a property worth $600,000 and another one worth $475. So we've got $1,075,000 in property. When we go to buy our second property, we're going to purchase for $600,000 and our costs are $35,000. So we're going to have a loan of $635,000. So in both of these examples, you have leveraged and you've used the equity in your home, no deposit from you, to buy 2 investment properties. So now we have a total portfolio of 1.675 million with loans of 1,285. Now remember, with those loans, you owe 150. That's what you're paying off your home. Then you've got the $500,000 mortgage and the $635,000 mortgage. Both of those properties have rental income coming into them. They're being paid off by the renters. And of course, we know rents are at an all-time high at the moment.
Yeah,
which is amazing.
We'll talk about the market update as well.
Yeah. So when we have a look, we've got the LVR with 2 loans. So anyone who doesn't know what an LVR is, it's a loan to value ratio. So when we look at your home and we look at the purchase of an investment, when we purchase one investment, we've got your mortgage of 150 and the new mortgage of 500. So you owe 650. That's quite a low loan amount in Australia, just across the board, to owe on 2 properties. The value is 1,075, so the loan to value ratio is 60%. When you buy your second property, the loan to value ratio has lifted up to 76%. You've still got 23% or 24% in equity. The equity is still sitting there in your home. But without any money, you've been able to buy 2 properties.
Yeah. And again, having a 20% equity is very healthy, like above 80, maybe. This is about like the risk appetite of each client, but 80% like can be.
And that's why I've tried to use reasonable examples. Like these are very realistic examples. A $600,000 home would be, you know, a medium to low house value. A $475,000 home, again, that's a great starting point when you're looking at investing.
Yeah, because the rent has a limit, but the price of the property will grow. So eventually you will get higher yields that will be able to make it like better for your cash. So,
but you can unlock the equity from your current home to buy your next properties. You don't actually need to have a deposit.
So as you can see, Melissa, the expert here.
So unlocking the power of equity in 2024. So leveraging equity can amplify wealth creation potentially for investors. And I guess that's what it's all about. That's how you make money, by leveraging what you already have. And moving forward. So controlling, you know, having more properties, controlling more properties, diversifying your portfolio, you know, increasing your return on investment. You're using your home to buy something to increase your wealth without any money. Leveraging this equity by borrowing against it to finance additional investments. We just spoke about that. And capital growth. Capital growth is what it's all about, buying in the right location so that you grow your wealth. And you buy that first, second, and third property.
And we'll talk more about like the when to buy. Now I think we're gonna go now to market update.
Yeah.
So yeah, let's talk a bit about the market update. What has happened this last year in Australia? So in terms of price evolution, the market has softened, but not everywhere. And this is where you can start seeing the difference on where to invest. So you see Sydney, Melbourne, Hobart, Darwin, Canberra, like either flat or even negative growth.
We've noticed that a lot of the major cities, Melbourne and Sydney, have really come off in terms of price.
Like it's cyclical. It may eventually grow. But during the last year, and our advice for a fact, we haven't been investing in these areas. Whereas Perth, Brisbane, Adelaide, those are and they have been growing, which means you will have more equity to buy your next property investment, and that's what's happening with a lot of our clients. But even better, the rent evolution as well. What last year was a 4% yield, now it's 4.5. It's coming next year will be 5%. So this is something that we usually try not to put in the equation, in the factoring what you're investing now, but it's something that will happen, and you will see higher cash returns also in your on your investment.
And there are also states that are taking on more migration. They're growing as well. So those economies are growing.
Yeah.
So, and we're seeing that across the board. And of course, where there's growth, there's potential for properties to increase in value, rents to go up, because you need housing.
You need housing, and there's a scarcity of housing now. So again, we expect this like to keep outperforming, first of all, because it's still affordable to buy in those areas. Like
Yep.
in Sydney, where you can't buy a house now, like for less than 700, 800,
Yeah,
okay,
easily 700 or 800. Yeah.
Whereas in the areas where we're investing, you can buy for 450, 500, 600K. So it's more affordable. So still there need to catch up towards the big capital
And
cities.
it's less risk adverse for people who are, you know, a little bit fearful of jumping into the market.
Yes.
So, which is great.
And then low supply. There's still like a lack of supply. Growing demand. There's interstate, but there's also immigration. Like Australia is one of the, I think the only country in the OECD that continues to grow its population.
Yeah, it does.
This means more immigrants, more houses.
Yep.
And the construction is not yet catching up. So,
No, and when they come in, they actually can't afford to live in Melbourne and Sydney, which is why they're going to Adelaide.
Yeah.
They're going to WA.
and believe it or not, these are trend in Australia. Like our investments in Spain are not usually Madrid, Barcelona, which are the main cities.
Yep.
They're usually in the third city, fourth city, which is Valencia, Zaragoza. So it's usually a trend, like not to invest in the main cities.
In the main cities
of the country. Talking about like, okay, why now? This is like I always get asked, should I buy now or not? I always respond, the best moment to buy is when you were born. That's the best moment. Obviously,
So I always
you
say
haven't
the
bought.
best moment to buy is when you're ready. It's like having a baby. You just don't know when you're ready. You just
Are
have
you
to
ready
do
to
it.
have a baby always? Like,
Oh, God.
you just have to have them. Like, yeah, I agree with you. But it's just the sooner you do it, the sooner you'll start benefiting from it. And going back to the basics, which is the initial slide, it's a long-term thing. And you start seeing the benefits in the long term, that compounding growth. So the sooner you start,
the better off you are.
Now, whether the next year is gonna dip or not, honestly, few people end up guessing when, like, okay, this was the best moment. In hindsight, it's very easy to know, but you never know if it's gonna, but cyclical, it will end up growing in the long term.
I actually think 2024 is a great year to buy an investment property. From an interest rate perspective, I was with actually the chief economist from Westpac last week. We had a very intimate lunch. She was the governor of the Reserve Bank, and her predictions are 2 rate drops towards the mid to later part of the year. She said, pen September into your diary. And once rates start to drop, you'll actually see growth in the market. Because buyers come back. So you need, if you want to be on the forefront of that, now's a great time to start buying.
We see some clients now telling us, is it expensive already? Look, think about how expensive it can get. And how often do you hear people, wow, I wish I have bought 5 years ago.
So I will share with you my first house price. And look, this is just going to make me sound old. I paid $54,000 for my first home.
Okay, but not deposit, full purchase.
We had laughing over here. That was full purchase price.
Oh my God.
So you can't even buy a car for $54,000 these days. So like, you know, and like we talked about before, property always grows over time. It's a hold strategy.
I agree. And then factoring the rental yield. So again, we've seen the growth these last 2 years, like massive growth in rent, but it's, as per what we discussed before, it's expected to continue growing because there's a lack of supply and there's an increase in demand. So more demand than supply. Yeah. Just that will factor like higher yields.
Yeah, absolutely. Oh, commercial versus residential property investment. So this year in particular, I've had a lot of questions around commercial investments. Commercial seems to be a growing market, but residential is obviously less risk adverse. So usually it's usually a lower cost to get into the residential market, and it's definitely more steady and stable income. So you find with commercial investments, tenants can come and go, businesses, you know, depending on the economy, they can go bust. You've got a lot more risk with commercial. It's also a bigger deposit required. So you need more money, which means that you don't have as much equity to leverage. So you can't buy as many commercial properties. So residential investment is definitely the way to go if you're looking for something stable and something long-term.
And also replacing a McDonald's. Like you probably won't find a McDonald's store. Like if the McDonald's leaves your commercial premises, finding another McDonald's, okay, who's gonna be there? So it's not so easy. Like
it's not as easy
yeah.
as people think. And look, with commercial, over COVID, how many landlords went without? Because those businesses had no business. Whereas, you know, with residential investment, people were still paying the majority of people were still paying their rents. It's much easier to finance and you need less equity, and much lower bank interest rates. So you're paying less. It's interesting though, that this is a year where I have been absolutely asked about commercial by almost every single investor.
Even like first-time investors?
First-time investors. So, and we talk it through. We talk through, what's your strategy? What are you looking at doing? Exactly what Hero does. And we go through and we look at why. And a lot of them are like, well, I read somewhere that it's really good to invest in commercial. So
the main issue with investment is the decision paralysis. That people don't end up taking action. So already getting into something that's more complicated to understand, commercial investment, like that's why I always suggest, if it's your first investment, start with residential. It's like a no-brainer. Then whenever you've had like a few investments, move into commercial, diversify, do other stuff, but start by doing residential is a great point.
Residential is the way to go, especially when you're a younger investor. A more mature investor will look at commercial for diversification, but a younger investor, definitely residential. And there seems to be so much more, I mean, we spoke about this earlier, potential for growth. So, and again, why would you not employ someone like PropHero to actually help you find the property rather than look for a commercial property all on your own? No.
Okay, so let's leave some minutes for some questions. Chat.
Yeah.
Can you read it there? Like I
No, my chat's not on either.
Here, okay.
Here we go.
For Q&A. Hi, Pablo. I'm an IT professional and reading here, and I've been considering engaging buyer's agency for my next purchase. Why do you think PropHero is better than other buyer's agencies? So, first of all, our data models and the way we analyze the market probably is like more advanced. I'm not saying we are the only ones using it. Probably there's some other buyer's agencies that may do it, but I would challenge. I would ask, okay, what's your track record on how you've outperformed the market? That may help you choose one or the other. Secondly, again, taking care of the whole process from an app that you can access anytime, like it's very much more comfortable for using for our clients. So I would say those two things are one of the, again, our tech and our data models and our app. And then obviously, if you're thinking about global diversification, that's something that we can also help you with.
Yeah, it's technology and team.
And obviously, with that taking care of everything, is selecting the right partners. So I don't know if that buyer's agency will have like done the thorough full analysis on which partners to go with in each part of the journey, but also like the right property manager, the right broker, the right solicitor. Like it can save like a lot of you in your investment.
Yeah, and look, one of the reasons that I love PropHero and that we've partnered with you guys is because of the data. So, you know, you have your stats, you know what they are, you know how much you can grow.
How much people ask us, can we use just your data? Like, it's not just that, it's obviously that, and we're not gonna just sell the data.
No, it's a service, an end-to-end service.
100%.
Yeah. So, question, what are the tax repercussions of buying a property in Spain from Australia?
So they charge a non-resident tax of 24%, which then gives you tax credits here in Australia. But again, we're not tax advisors. So this is something that you should definitely check with your tax agent here in Australia. Okay, so make sure to be informed by your tax agent, because we're not allowed to give you tax advice.
No, we're not. Now, someone said they were looking forward to hearing about negative gearing and how it works. I'm wondering whether or not we answered all of those questions.
So do you want to, okay, this was before or after the?
This was after. So this was after the question. They were looking forward to hearing about negative gearing and how it works. But we've run through that.
Okay.
Yeah, if I can recap.
The same slide?
Yeah, we'll go back to the same slide. So negative gearing is all about the difference between the expenses you incur on the property, and the income that you derive from the property. So again, the simple example that I put together, purchase property of 475, costs of 25,000, you're going to lend $500,000. In 1 year, you incur expenses of $33,000 and you generate rental income of $24,960. So the difference is expenses, less income is a negative gearing portion, which is highly tax deductible. And like I said before, about 95% of that would actually be, I'm going to say, regifted to you from your tax from the government. So you would get about 95% of that back, depending on your circumstances and your income, of course. So
does that answer your question?
hopefully it does.
Okay, is there any more questions?
I don't think there is. Are there
I
any
can't
more?
see more questions. Do you have any other questions? I can't see more.
No other questions? Amazing.
Cool, yeah. Look,
Another one.
another one.
Okay.
What kind of clients do you suggest buying overseas? So what kind of clients or values or which areas? Like, well, I will
So
answer
I-
both.
Yeah, and I think I can answer some of that too.
Yeah, so do you want to
Yeah,
answer
so
that?
any like super funds, we had this discussion today in the office. Super funds are a great one for buying overseas because you have the money and it's there and it's accessible. It's really hard to, well, it's actually in Australia, you can't get funding for an overseas property because they can't take the title.
Hmm.
So you need to do two things. You need to have the money in your super fund, or you need to have a lot of equity in your property that you can leverage from. So again, if you own a home and it's worth $800,000, we could give you cash out up to 80%. And you could go then and use that money to buy overseas.
Yeah.
Because you're buying investments, you're buying income generating, investments.
Yeah. And again, going back to the principles of getting started, I wouldn't start with one overseas. I would first start with simple one, the one that here in Australia, you're Australian. And just then you'll end up going for the next either if it's commercial, if it's overseas. So it's just getting started. I wouldn't suggest for a first-time buyer to go overseas.
No, I wouldn't either.
I would suggest, first start and then build the equity, or if you have in your SMSF, then that would maybe an option.
Yeah.
And then Bali or Spain. Again, eventually, why not both? So it will depend on your appetite. A lot of our clients that have bought, Aussie clients that have bought in Spain are mainly expats from Europe who have been here, or immigrants from Europe who are more familiar, whereas the Bali ones are more maybe for second, third generation Australians that are more familiar with it. But we've also got clients in Spain buying in Bali, and most of our clients are overseas as well. They may be clients from Dubai, from Singapore, from many parts of the world that end up buying different products. So yeah. Bali or Spain, I have in both, and I'm enjoying both. So I would say Bali is a more, it's more yield focused, because you're not gonna own the property for life.
Yeah.
So it's more of a financial product being at the back end of property. Whereas Spain, it's a very low ticket entry, and both the yield and the capital gains are phenomenal.
Yeah, I'm going to Spain before that.
And that way you get to travel to Spain.
Absolutely, yeah. Absolutely.
Sure.
Yeah.
Cool.
That was an easy convince.
Yeah. Awesome. Any more questions?
No,
Cool.
all right.
Well, just before we finish, I wanted to say that there's an offer to all of those who engage from the webinar, that have been registered on the webinar and want to engage with PropHero. They will have a 10% off from our success fees. And obviously, this includes the full buyer's agency service, the dedicated property coach, lifetime access to PropHero portfolio app to help you grow and optimize your property wealth. We'll have that investment strategy session. You have access to discounts from partners, because that's something we didn't mention, but in our marketplace, one of the things that you can benefit is that with volume, we end up gaining discounts from our partners. Yep. So your final investment ends up being lower. And then obviously that portfolio planning and management, growing and optimizing the portfolio. So make sure to
Amazing.
engage with us and
Yeah.
hopefully also working with Melissa.
Yeah. Get the right property in the right location.
Nice.
Yeah.
Well, thank you very much, everyone. Yeah, hope you enjoy the rest of your day and the week.
Bye. Thank
Bye.
you.